TradeTheMBI.com. This is John's report is for the 16th of March. Yeah, it's March have arrived. Are we having fun yet? Look at that wild move below parity for the year. Closed back above it, but still below the 23%. And it's that fight between the magenta and rising white. Yeah, we were expecting a little bit of a, support coming back through with the magenta move, but white still maintaining itself in the lead. And here we are caught between red and cyan on the DOC, and anytime orange is in the middle of those, that's continuation, which in this case is volatile and straight across. So that's kind of what we're seeing. We're seeing a little bit of pop up here. Minus 18, we're at that threshold with the green DOC when it reaches below that 23, 25 level. Particularly, you're going to get some type of bounce back. Same thing happened back over here when similar situation occurred, gave it a brief bounce, wasn't able to sustain itself because we had that white MBI lead pushed back over. So we're in for more back and forth, but above the extreme histogram and this move coming back into the wick of that, pretty close to satisfying that dip below the red line. But I think we're still going to see some back and forth. And of course, we've been talking about it, the battle between this idea of what the Fed should do versus what the Fed's not doing, and the market wanting to bet on the rosy scenario versus the uglier one. And it's been problematic because the Fed's in a very difficult position, because at the end of the day, are they going to contain inflation, or are they going to let it continue to go? As I've always said, the best option was getting oil prices down. That would solve a dramatic portion of it. And I think we're starting to see some movement there from an NQ standpoint. Much stronger, moving back up just below where we had from that previous algo level, and it's been positive. Big differential though between the Nasdaq and the S&P, and the broader market is struggling a bit more because I think there's a broader range of issues. In the broader economy, it's hit and miss, whereas in the Nasdaq, I mean, you're tech sensitive for the most part, so it just tends to fare better. This is a wild chart. When you look at TLT Treasuries, this kind of movement is just insane, but you've got all these people flocking to try and capture guaranteed yield versus the S&P right now, which is a zero return for the year. And you can lock in a much better differential if inflation softens, wanes, or there's softening. Then hey, you might actually get a 1 or 2% return on those 4 and 5% treasuries. The problem is that you've got this tightening of this yield between the 2 and the 20-year and 30-year mortgage and treasuries, and it's just a problem. And no quick solution to it. And the market, don't want to say it's wrong. It is doing what it's doing, but is it justifiable where things are at? Yeah, for safety purposes. I mean, this is just about running to safety. It's not about what it's yielding, because the negative scenarios within the market are significant. Now, this gets us right down towards that range that I was talking about for some time, that would be a catalyst for making things a lot easier on people. If that's sustainable and able to stay in that range, I think you will see a softening on that inflation. You'll also see the ability of businesses to maybe move some of the capital that's being sucked out through high energy into other areas, which is a net positive, but it's going to take some time. And that's not going to be until summer, so we'll see how long it's able to sustain that. Gold has to continue, and this is what I get with the TS. It just randomly did this. I had all these charts up earlier, and then it did the exact same thing on me. So I would have gone over euro, which the euro, what a disaster. Finally, the whole Credit Suisse thing, but it's a reflection and a wake up call to everyone that it's not just Credit Suisse, it's all European banks that have been buying ECB bonds. It's the same thing happening with all the small banks. Swiss government has to step in. They're going to, to support the situation. The Fed's going to have to do the same thing for small banks. And It's just the reality of it. Will it work out? Eh, it's hard to say, but that plunge in the euro is a representation. Nobody wants euros. They're all flocked to dollars, and and central governments will have to step in to support their currencies, and that's just the way of it. There's no quick and easy around it. I mean, you have too many people using them for them not to be viable, but um, are they worth as much as where they're at? Probably not, but you could say a lot of the same things about the market and other areas. And this is fueling the bounce of crypto, albeit not super stable at this particular stage, given that we've had so much red MBI leading here. As soon as that pivot lower, but you're at 55. It's going to take a while before you get down towards the 33 for a significant kind of cave back. And from Ethereum, similar situation. Uh, Almost identical in that, but it was a strong dip of the orange and pop up. It's just rare that those last for significant run, 3 to 5 days, and then usually you get some kind of fill back, particularly if there's positive extreme. In this case, we only had the one, and it's already filled back in place, so that wasn't too horrible. I doubt there's been enough time for the intraday charts to come back, so I have to put those up when they come back on. Another one of those situations. Once it's stabilized, it's fine. It's just getting it to work after that updates, which I've tried canceling all the different configurations and it still seems to do it. It's mind-boggling. Regardless, though, I think that we can see that the headwinds for the market be lucky to just hold on to where it's at. But I think once you break below that parity level, it starts to scare some people. And this continuation reading is fairly reliable. I mean, it usually works pretty darn well. So I think that's kind of stuck here for a little bit until things start to flesh out. And that's going to come from some of the data. Um, but a lot of all this is about the speculation game of the Fed and what they're going to do. So we know what the Fed has said they're going to do. Everyone thinks all of a sudden the Fed's going to change their mind because of this situation right now. That's wishful thinking, and if they're right, great. But if they're wrong, they're going to be wrong epic. So take that into consideration. I think a bit of volatility, though, intraday has been fantastic and very easy for us to read. So take it. As always, though, I'll continue to update you on the Skype chat. Trade well.